Well, the crypto market sure always does have a lot of surprises, doesn't it? Crypto, man. Bitcoin down, crypto down, stocks down, lots of macro fears remain in the market. And look, we do have some very important things happening in the month of March that could continue to weigh very heavily on the market, continue to inflict a lot of volatility on the market, continue to basically have that perfect fear uncertainty situation that markets just hate. So in today's video, I want to share a few of the reasons why that is the case, a few things to look out for, as well as some good news near the end of the video, so make sure to stick around, as well as what I am personally doing during this time. My name's Lark. Every day I make videos talking about cryptocurrency investing. If you like that topic, you'd like to stay up to date with what's happening in the cryptocurrency markets, then quick smash on that thumbs up button would be pretty cool, man. Pretty cool. By the way, every single week my team and I produce Wealth Mastery. It's the Cryptocurrency Investor Report, altcoin reviews, DeFi, tutorials, token sales, airdrops, much more, NFTs, all that fun kind of stuff. You can sign up for free using the link down below in the description. Go premium for less than $10 a week. Now, let's get into this topic. So, we lost the moving averages again. The downtrend, it's been pretty hard to break out of. We've lost our 21-day exponential moving average. We've lost the 50-day simple moving average. Massive just rejection off of this key area of resistance. Obviously, our double bottom is not playing out. Did not confirm, of course, as I mentioned in the video the other day. You needed to confirm above that top line. Well, we didn't get that. We basically just been going straight down since then. Our hopium, well, didn't hit quite the way we wanted it to. So here we go, losing key moving averages once again, showing that the short-term momentum for the cryptocurrency market is bearish. We need to come back up above this huge area of price resistance here. We did not manage to even get back to test the high of February 10th. And just so you understand, too, the 200-day simple moving average is now slightly trending downwards, by the way. But that is our key line here for the bulls and the bears. Once we get back above that, that will bring that bullish momentum back into the cryptocurrency market. But we've been trading under that for a very long time now, ever since all the way back here in late December. So the entire year of 2022 so far, we've been trading under the 200-day moving average. Haven't even got close to it, really. We've been, $5,000 away, which is a pretty big distance. And of course, across this massive battlefield of resistance in this area, it's going to be a tough cookie to crack. Do you crack cookies? No, you crack nuts. It's going to be a tough cookie to eat. Do you eat cookies? I don't know. Whatever. You guys know what's up. So hopefully, of course, if we do see any further price retracements, we don't go any lower than this orange line. That would be the area we want to see hold. If we lose that, then that means the situation of higher lows has been invalidated. And that could lead to, of course, further price depreciation. So we want to make sure that we do see this price holding here, this orange line holding here over the weekend. Weekends can be pretty gosh darn volatile in the cryptocurrency market. So that's what I'm watching out for if we do get any pullbacks. Right now, I have bought some more Bitcoin, around $39,300. I've got another order in for Bitcoin at $37,500. If we, go lower than that, I'll probably snag a bit more too. Just keep adding in on these dips, accumulating for the long term. Honestly, buying under the 50-day simple moving average, buying under the 200-day simple moving average, tend to be good times to accumulate, which is exactly what I have been doing. Now, what the heck is going on? Why is the market so spooked again? Well, in case you have forgotten, there is a major conflict going on in Ukraine. Russian military forces have invaded the country. There's lots of violence going on, lots of chaos going on across the country. And that means we are always one news story away from a market dump, which is exactly what we saw yesterday. So there was an attack on a Ukrainian nuclear power plant. A fire broke out. That fire has since been put out. I think the Russian military might be currently in control of that. It's hard to know in the fog of war exactly what's going on. But the most important thing, the nuclear power plant has not melted down. It has not exploded. Nothing of that sort has happened. The fire was in an administrative building. But the news that there is a fire at one, I think it's actually Europe's biggest nuclear power plant, that spooked the heck out of the market, realistically. Equities started dumping as soon as this news came out. This is the exact kind of news that you don't want to see coming out of a war situation like this. So that spooked the markets. The situation seems to be over currently, but just so you understand, these kind of news stories can keep happening, right? There's a lot of variables here in this situation in Ukraine that can continue to affect markets in a very, very serious way. Also, a major factor that we need to consider is what is happening in Russia, because, well, everybody's focusing on what Putin's done and the Russian military is doing in Ukraine. The reality is the Russian economy is probably about to have a catastrophic collapse. The ruble has been crushed. International companies are pulling their business out of Russia. The central bank has been sanctioned. The Russian stock markets have collapsed. The country's been cut out of the SWIFT network, meaning that companies can no longer send money back and forth. We've been talking to friends in Russia, and they're saying, well, yeah, our companies don't have much business like almost immediately because we can't make payments to our international partners to buy wine or to send packaging or whatever it might be. It's having an immediate impact, and this has not, fully come out yet. Russian airlines, they've been largely prohibited from flying to a lot of places, so we could see bankruptcies for Russian airlines. We could see bankruptcies for VTB and Sberbank, which are the biggest banks in Russia. We're talking about catastrophic stuff here. We've never seen this happen to a major global economy. I mean, Russia before this was the 11th biggest economy in the world, and this is a massive, massive thing that happens. We also see heavy currency controls coming in for average Russian people. There's prohibitions on sending hard currency abroad. There's, I think, a 30% tax came in if you want to trade rubles for dollars or euros. It's insane. It's absolutely insane. Massive media blackouts. Facebook has been banned and Twitter now. Opposition leaders being arrested. Opposition media has all been shut down. It's an absolute mess. And the reverberating effects of all this, if you want me to get to the point here, the reverberating effects of all of this stuff are an unknown variable. We have never seen this much of an economic assault or potentially this dramatic and quick of a potential collapse of an economy, of a major global economy like Russia before in the modern times. We're entering into uncharted territory here, and there's a lot, again, of uncertainty about how all of this could be playing out. And then, of course, unfortunately, you have, political elites out here saying that they want regular Russian people to be banned from crypto. And I just don't agree with that. Look, it's one thing to target the oligarchy, right? Those people are thieves and have stolen trillions of dollars probably from the Russian people at this point. It's a whole nother thing to tell average people you're not allowed to access crypto because, as we just discussed, currency controls have come into place. It's difficult for the average Russian person to get money out of the country right now. Bitcoin is a life raft for a lot of people, regular people who are against what is going on right now. So pretty crazy situation there. The EU also taking measures to prevent Russia evading sanctions with crypto. So it is definitely coming. Now, that's largely focused at the oligarchy, but, that's going to be hard to make sure it's just the oligarchs being targeted. Hopefully we don't see blanket bans coming in. We have a lot of countries, the EU, the US, putting crypto in their sites right now because they're very aware that it is a method that, the wrong people in Russia can use to get money out of the country. Hopefully they don't bring in legislation that makes it hard for the right people to get money out of in and out of Russia. So all that stuff going down, two massive situations, the economic collapse of Russia, the conflict in Ukraine, and then you have Jerome Powell, who in 10 days' time, is going to put rate hikes in the US. So that is coming. You know the old saying, beware the Ides of March. I mean, did Jerome Powell really need to put his Federal Reserve meeting on the 15th of March? I mean, couldn't he have chosen, like, I don't know, March 20th or something? Is he just screwing with us at this point? I mean, come on, man, come on. Anyway, why should we be worried about rate hikes? Well, here is a history of rate hike impacts. So this last 5 times anyway, 88, 94, 99, 04, and 15. In 3 of these situations, we had a brief rally just after the rate hikes were announced and confirmed and started, and then a dump. In 2 of the situations, it just dumped. But in all 5 of these situations, the market's dumped. Whether there was a short rally and then a dump or just a dump. Will this time be different? It can always be different. But look at the historical realities of what has happened with these rate hikes. Yes, 12 months after rate hikes, markets historically have finished higher. But the immediate impacts, the week or 2 or 3 or 4 weeks after the rate hikes, tend to be volatile to the downside. There's no guarantee that's exactly what's going to happen again. This is a different situation. But we have lots of stuff going on in the world that makes the markets already shaky, and then you have this. Just so you know, the average time to reclaim pre-hike price highs is 18 weeks. So it takes a bit of time for the markets to recover after these Fed rate hike increases. Again, 12 months after the rate hikes start, markets do usually finish higher. So that's, I suppose, the silver lining of all this. But just be aware that this is what could happen. This is the historical trends. This time will not necessarily be the same, but there's a chance that we could be facing a very similar scenario. Good news to finish up the video. Switzerland's city of Lugano will make Bitcoin legal tender. See, it's not all bad news today, guys. Just mostly, bad news. But that's good. I'm pretty excited to see a city making Bitcoin legal tender. Well done, Switzerland. That's absolutely awesome. Let's see Bitcoin be legal tender across all of Switzerland. I think that would be like mind-blowing stuff. Awesome that El Salvador did it. If Switzerland did it, game-changing. Game-changing beyond belief. And look, final thought before I finish this video. What am I doing? What is going on in old Larko's head here? I'm just buying more Bitcoin. Stacking sats. Accumulating, guys. You know, I've got a big stablecoin position for rainy days. Well, it's raining today, metaphorically. That's actually a nice day here in Wellington. But it's raining today, so buy more sats. Stacking those sats. Long-term accumulation for crypto assets. This asset class is not going anywhere. I'm a massive bull on the cryptocurrency markets, and I'm going to be here in 2025, 2030, and beyond, still holding my Bitcoin, still investing in these cryptocurrency markets. Anyway, just my 2 stories for today. Let me know what you think about any of this stuff down below in the comment section. Thanks so much for watching today's video, and peace out till next time.